Bottom line is there are three major hurdles that you have to overcome. One is money, down payment, right? The second one is credit. You got to have credit. Of course, if you've been on your job and you got credit, I'm going to show you how to boost your credit score, how to get money for the down payment. And the third is closing cost, how to get that closing cost covered so you can get the best rate. We're going to do that right here, right now, just as quick as we can so we don't waste any of your time. Let's jump in real quick. To start with number one, the money. People have to understand it doesn't cost you a whole lot of money to buy a house. There's a program out there called USDA, United States Department of Agriculture. And just like you see the USDA stamped on meat, for example, at the department store, well, it's the same thing. And you see, it's not just a loan for land, it's not just a loan for farmers, it's a loan in rural areas. And rural areas means suburban areas. Now, this ain't way out in the sticks, although if you want to move out in the country, this is a prime loan for you because it's a 100% loan. And listen to me, you have to understand, tell your mom and your dad and your brother and your sister and your buddies at work or anything, this isn't the do-over of 2008, 2009. That was a totally different 100% loan program. Those were what we called ninja loans, no income, no job, no asset, and they were with BC lenders. In other words, if you had a 520, 550 credit score, in addition to that, you know how many people that committed mortgage fraud because they falsified tax records, they falsified documentations? Yeah, one of the biggest white-collar crime scams in the United States history. That's why we've seen the market crash. That's why we've seen so many foreclosures, because the bottom line is people bought homes and they truly weren't approved. Now I'm going to show you real quick how to get approved, how to boost that score, and how to get down payment money. Bottom line is you don't need down payment money. It's really simple. I tell people, if you've got $1,000 saved in a 620 or higher credit score, you can buy a house. Now if you don't have a higher score than 620, there's a couple of things that you can do. And you may want to write this information down. One, you want to pay your bills on time. You're probably thinking, Wayne, that's a no-brainer, right? But here's a quick little trick. You want to slow down what you're putting on the credit. Slow down what you're putting on the credit. And I'm going to tell you another little trick here in just a minute, right before you buy a house and right after you sign a contract on a house, that will make a huge difference in whether or not you close on that home or you lose that home. Now, really quick, one of the best things you can do to boost your credit score is to physically sit down with a pen and piece of paper in hand and look at every single thing that you owe. Medical bills, student loans, car payments, and then look at credit cards. If you have 3 or 4 credit cards, 16 credit cards, it doesn't matter. Sit down at the kitchen table and write down what you owe, that balance, and the minimum payment. Then what I want you to do is I want you to put them in order. I want you to put them in order from the least amount of money that you owe to the most amount of money that you owe on each card. Are you with me? So start has nothing to do with interest or anything like that. I want you to start with, this is called the snowball effect. You take the lowest balance. If you owe $200 on one card and $3,000 on another card, the $200 card's got to be at the top of the list. What you're going to do is you're going to pay the absolute minimum on everything. Minimum payments on every card. And then you're going to take as much money as you can and pay off that credit card that has a $200 balance. Don't put anything else on it. Pay it off as fast as you can. And then the second one in line, let's say you got another one that's $400. You take the money that you've been applying towards the $200 one, keep paying the minimum on the rest of them, and put as much money as you can on that $400 one. You do it to the next one and the next one and the next one. That's how you create a snowball effect of getting out of debt. Not just getting out of debt, but when you do that, it will boost your credit score literally 40, 50, 60 points in just a matter of a month or two. Now, as I mentioned, you need a 620 or higher credit score. Now, if you're a veteran, you're VA, you can actually have a 580 score. Of course, you've got to have income, job verification, all that. You know, it's a no-brainer. Of course, you've got to have the income to pay for the house. But here's one that's really exciting. If you've got a 620 or higher credit score, you can get one of these USDA loans. You can also get an FHA loan. Now, an FHA loan, it's really important for people to understand. The Federal Housing Administration allows you to buy a house, and you only need 3.5% to put down. Now keep in mind, all of these have closing costs, and I'll address that here in just a second. I'm going to show you how to get those closing costs paid. All of them, 99.9% of the time. So you see, with FHA, you only need 3.5% to put down. With VA, you don't need any money at all, but you do have closing costs. And as I mentioned, I'll show you how to get that paid here in just a second. But a conventional loan, for example, you're going to need a minimum of 5% down. So listen, throw all that adage. I don't care what anybody says, you got to have 20% down to buy a house. You absolutely do not have to have 20% down. You can buy a house with USDA, United States Department of Agriculture. So 100%, 100%. VA, 100%. FHA, you need 3.5% to put down. Conventional, you need 5% to put down. All that's fine and good, but you got to make sure your credit score is upwards of around 620 or higher for USDA, conventional, and FHA. But here's something that you need to know. When you get an FHA loan, you're going to have to pay private mortgage insurance. Now, that's the mortgage insurance premium that you have to pay that covers the insurance company, and you have to pay that if you do not put 20% down. And listen to me, this is really important. If you're going to put 20% down on a property, you want to make sure you go a conventional loan. And here's the big reason why. Because with FHA, when you get an FHA loan, you're always going to have to pay that private mortgage insurance. The only way you can have it removed is if you refinance the house into a conventional loan. Now, you can do that, don't get me wrong, but why not just start with a conventional loan if you're going to put a minimum of 5% down? And here's the reason why. Here's the benefit and the difference, if you will, between FHA and conventional. When you put 5% down on a conventional loan, that private mortgage insurance will remain on the property until you have 20% equity in the home. And here's how that works. You buy a house, it's going up in value. You're paying down the mortgage balance. Once you have 20% equity, in other words, it's increased in value, typically around 4% per year is what we see on average for homes around the United States. That's the average right now. We're seeing a 4% appreciation. So people talk about, oh, homes go down in value. Listen, real estate is hyper-local. It truly just depends on where you are. If you're in a market where it's cranked high real fast, and it will crank low real fast, such as Miami, for example, or maybe you're in San Diego, California, or Los Angeles. Those markets are a little bit different. But for the most part, we're seeing 4% appreciation. So once you have equity that's increased, and you have the balance that's gone down, you can simply call the mortgage company and say, hey, I'm almost positive I have 20% equity in my house. And if you're not too sure, you can call a real estate appraiser or a real estate agent for a couple of $100. They'll do a market analysis on the house, show you comparable properties, and tell you, yeah, you do have 20% equity in the property. Like again, they may charge you a couple of $100 for doing that, but that way you know before you even call the mortgage company, you can call and say, hey, I got 20% equity. Once you have 20% equity, literally the very next month, they will remove the private mortgage insurance that you're paying. And sometimes that can be upwards of $200 to $300 a month. Now let's jump into closing costs. You liking this stuff so far? If so, give me a thumbs up, type yes. Wayne, it's good. Any questions that you have, I address and answer all questions. I know I work 14 hours a day, but I love it. I enjoy this stuff, and I have been for years. So let's jump into closing costs. Closing costs can be paid by the seller, and they are paid by the seller 99.9% of the time. And if somebody tells you that they can't, maybe you should fire them and hire somebody else who tells you what you want to hear. In worst case scenario, hell, just tell them to call me or email me. I'm pretty easy to find, WayneTurnerTV.com. I'm so confident because I've sold thousands and thousands and thousands of houses. And I can tell you that you can negotiate the contract to where the seller pays your closing cost, especially in this market, because we're not in a seller's market. One thing that people need to know, though, is when you have the seller pay your closing cost, most of the time, they're not going to come off the price a little bit. So you have to understand that when they're paying your closing cost, and closing costs always run, write this one down, closing costs always run you 3.5% of the loan amount, not the purchase price. But if you're doing a 100% loan, your purchase price is the same as your loan. But if you're putting down 5%, you buy a $200,000 home, closing costs are going to be based on $190,000 because you're putting 10 grand down. Are you with me? Bottom line is this. You can have your closing costs paid 3.5%, but if somebody pays 3.5% of your closing cost and you buy a $200,000 home, you have to understand they're paying around $7,500 on your behalf. So instead of you buying a house for $200,000, you're getting a credit at closing. But that allows you to buy a house with a USDA loan, for example. They're paying your closing cost, and it literally costs you no money to buy a home. And please understand, I'm not blowing smoke. I say no money, but here's what has to happen. When you go to buy a house, you're going to want to put a deposit on the house because that lets the seller know that you're earnest in the desire to purchase their home. They call that earnest money deposit. And listen, anything under, say, $250,000, you want to put up $500 minimum $500. And keep in mind, in most states, you can get that deposit back if you do your home inspection and the house doesn't inspect and you're not happy with it, or Lord forbid, you're not approved. But one of the biggest mistakes is you can absolutely make, huge mistake. If you learn anything from me, Wayne Turner, is do not go look at any home or write any contract on a house until you talk with a lender. So many people are like, it's one of those things where, and listen, I've faced financial hardship, man. I've been through the ringer. Nobody has a clue. But here's what you have to understand, and this is why I preach this stuff so much, and I tell this to people. I'm like, geez, listen to me. Do not go look at a house until you've been approved. Mortgage lenders right now, they will approve you. It costs you nothing. Now, there's a difference between being qualified and approved. Qualifying, you're just saying, yeah, I think my credit score is 620. Yeah, you should be able to get a loan. That's blowing smoke, man. It ain't worth nothing. What you need to do is get approved, because when you're approved, they're gonna pull your tax records, they're gonna verify your income, they're gonna pull your credit, they're gonna see your bank statements, they're gonna do all of that, and they're gonna say, yes, based on your income, your debts, your credits, everything, this is what you qualify for. And they're gonna tell you the amount of house that you can qualify for based on the monthly payment that you can qualify for. That way you know, and then you get a piece of paper. It's a simple one piece of paper. It's an approval letter. You wanna take that approval letter with you, show it to the agent that you interview, that you hire. Because listen, if you're, the way it is right now, real estate agents are saying basically they have to charge a buyer for their services. But it's so important to understand that even though we say that, we have to put that in writing. You have to sign a buyer-broker agreement for someone to even show you a house now. It's the law. They made it that law back in August, right? At the end of the day, last year, 2024, at the end of the day, 99% of the time, your agent is getting their fee paid by the seller. It's still happening, it's still doing. So that's why I say don't fret, don't worry. You can still buy a house and it not cost you any money out of pocket. If you want to do USDA, if you want to do FHA, you can buy one for 3.5%. If you can scrape up 5%, you can get a conventional loan. That way, as soon as you have 20% equity in the house, you can have that private mortgage insurance removed. So that's why I say interview agents. It's okay to say, hey, how many houses have you closed? How long have you been in the business? How many transactions have you done? It's okay to interview an agent. A good agent wants to be interviewed. Hell yeah, you better believe any seller, any buyer, I want them to interview me, because they need to make sure that they've got the best person for the job to look out for their best interest. You understand it's one of the most stressful things you'll ever go through in your life is divorce and buying a house? Yeah, it's crazy stressful because you're dealing with money pretty much in both instances. So at the end of the day, you just want to make sure you got somebody good that's working for you. Now, I said earlier that I want to share something with you, because this has happened to me. It's happened to a lot of people when they're buying a house. I can't emphasize enough. When you're ready to buy a house and you're getting prepared to buy a house and you're like, you know what? I'm going to buy a house. Nobody's going to get in my way. I can buy a house. And listen, there's a reason why rent is higher than mortgage payments. You have to write this one down. I heard it the other day. This is not from me. I forgot who I heard it from. But they literally said, if you're renting, you're living in someone else's dream. And I thought, man, that's deep, right? Think about that. If you're renting, you're living in someone else's dream, because most of the time, if you're living in a rental, their dream is to build wealth. Their dream is to own rental property. Their dream is to make money over the long haul, because homes go up in value. So at the end of the day, you just have to ask yourself, do you want to rent, you want to buy? If you want to buy a house, you can. Don't let anybody get in your way. The last thing you want to do is put anything on credit. A lot of people get approved, and I've seen this happen where people get approved, they're ready to go, they find a house, they write a contract, they go, they have their inspection done, they do their due diligence, you're ready. You're going to closing. The next thing you know, you go put money on a credit card to buy furniture or a computer or a new car. I cannot emphasize enough. If you learn anything from me, once you have the mindset and you start saving and you buckle down, you're like, I'm buying a house in 6 months, I'm buying a house in a year. Put minimum as you can on your credit cards, put minimum as you can on any kind of credit, and just focus on getting out of debt, building your credit score to 620 or higher, so you can buy a house and there's no interference. Listen, at the end of the day, don't stress it, don't fret it, have fun. You should enjoy it. I always tell people, man, I want to make buying a house for you fun and pleasurable. It shouldn't be stressful. And at the end of the day, you got to do what's best for you. Thank you for watching. Give me a thumbs up. Subscribe to the channel if you haven't already. I'm Wayne Turner. Until next time, may God bless you.